ASTS will continue to go up, at least if your time frame is long enough. If you want to understand what I mean by that, make sure to watch this video. Hey fellow investors, how are you doing? My name is Stijn, welcome to my YouTube channel. Oh, by the way, real quick, since we are looking at the fundamentals of ASTS, I will assume you understand their business model. If you don't, that's fine too. Check out this video where I compare ASTS to Starlink. This is big. We are looking at the financial projection summary of ASTS, which basically means their in-house projections for how much revenue, EBITDA and free cash flow they expect to do in the future. Of course, we need to take these numbers with a huge grain of salt, but we will, no worries. So ASTS gets to these numbers through the following method. They start out their calculations with estimating how many subscribers they expect from equatorial regions. And then they slap on a monthly ARPU, or a monthly average revenue per user. And of course they do the same for rest of world users, or global called here, and they slap on a different monthly ARPU. Basically, equatorial countries are on average less wealthy compared to, for example, Western countries. Therefore, the usage of cellular, but also the amount able to spend on cellular, will be significantly less in these countries. And of course, to be fair, ASTS is accounting for that quite a bit. Anyways, we see that the equatorial subscribers increased from 5 million in 2023 all the way to 41 million in 2025. All the way up to 180 million in 2030. And the same goes for the projected global subscribers, which goes from 4 million in 2023 to 67 million in 2025 to 440 million in 2030. And from these numbers, we see that they expect to do $2.6 billion in revenue in 2025 and $16 billion in revenue in 2030. Awesome, this we can work with. And work I did. I prepared 3 different spreadsheets for you guys. We'll first focus on the 2 conservative ones. These are actually the ones I use to get to my own buy targets for ASTS. Again, they will be quite conservative. First, 2025 sheet for the shorter term investors. And second, 2030 sheet for those here for the long haul. I hope to show you guys that by increasing your investment time horizon, you actually decrease your risk while increasing your profits at the same time. But more on that later, let's get into it. So this is the conservative 2025 sheet. So ASTS is penciling out an EBITDA of $2.5 billion in 2025. I personally prefer to use net income above EBITDA, since EBITDA, as you know, earnings before interest, taxes, depreciation and amortization, and those are all very real expenses. But ASTS is not providing future net income figures, since obviously that would be extremely hard to predict. And it would be even harder to predict for us, so just stick with EBITDA for now. Anyways, $2.56 billion in EBITDA, future year 2025 is currently 2021. I am penciling out a future price to EBITDA multiple of 7, which I think is fairly conservative. So $2.5 billion in EBITDA times 7 our multiple results in a future market cap of roughly $18 billion in 2025. So the entire company could be worth $18 billion in the year 2025. Currently there are 211 million shares outstanding, fully diluted. So the future market cap divided by the current shares outstanding results in a future stock price of $85 per share. Meaning ASTS could go up roughly 600% in 2025 compared to today's prices. So $85 using my discount rate of 15%, which you can see is my opportunity cost, results in an intrinsic value today of roughly $50 per share. But of course we aren't done here, there is quite a bit of risk involved with ASTS, which is why we take a margin of safety. I normally take a margin of safety of 50%, but that is for stable, profitable companies. ASTS is literally involved with rocket science, and they need to get the satellites up in the sky one way or the other. Therefore, a margin of safety of 65% seems more in place and fair. And that margin of safety results in a buy target of $17 per share. Awesome, so according to these assumptions and a time frame till 2025, we get to a buy target of $17 per share. Now I want to show you guys what could happen if you are willing to stick around for longer. So let's look at the conservative 2030 projection. For this one, only 2 things change. First, the projected EBITDA of $16.4 billion in 2030, and second, the margin of safety. So in this case, with that projected EBITDA and the same future EBITDA multiple, I think we can go up to a future market cap of $114 billion. By the way, that's almost $540 per share, or almost a 50x increase compared to today's prices. You heard me right, a 50x return on your money. Anyways, that discounted at my opportunity cost today's value results in intrinsic value today of $155 per share. And of course, even on this time frame, there's still quite a bit of risk involved with this company. After all, ASTS business plan is quite complex and it's extremely hard to predict what they will do in the future. Anyways, since ASTS is planned to grow so hyperbolically, we can slap on a margin of safety of 85%. And that results in a buy target today of $23 per share. And the best part is we can be way off on our projections. Even if ASTS misses all their projections, at the 10-year time frame, you'll most likely still beat the market, hands down. Except of course if they cannot deliver at all. If they cannot get any operational services up and running before 2030, well then there's no margin of safety that will save you. Anyways, my point is that by extending your time frame, you effectively de-risk yourself. In this case, your margin of safety, the margin of safety that will protect you if you mess up, well, that increased by 20%. And remember, your margin of safety increases while your buy target also goes up from $17 to $23 per share. So by extending your time frame, you're able to buy a company for a worse price but still have a higher margin of safety. And that even though your potential return goes from a 7x on the 2025 time frame to a whopping 50x return on the 10-year time frame. All those insane benefits just by being slightly more patient. So we now have looked at the conservative 2025 and conservative 2030 cases. And I hope you guys understand my point of extending your time frame and increasing your margin of safety. But that still leaves the third spreadsheet I promised to you guys. This one is the bullish one. This one is for if AST executes to a T, if everything goes perfectly. And there's actually only one thing that changes, and that's the future EBITDA multiple. We were using really low EBITDA multiples before, especially for such an explosive growth company like ASTS. Remember, ASTS is a company that has the potential to have extremely high net income margins in the future. The potential to have margins so high at levels we honestly haven't seen before. And taking that into account, I think we can easily increase this EBITDA multiple to 20. Aside from this, keeping everything else the same, ASTS is all of a sudden able to go up to $1,500 per share in 2030. Or way above 100x return compared to today's prices. And that is the insane part of ASTS value proposition. If they can execute, if they can deliver on what they promised, then our 100 bagger is certainly in reach. And if they are wrong, if they cannot execute at all, well then you only lost your initial investment. I think this is the perfect example of a company you should only invest in with the money you're completely fine with losing. I mean, it could be a home run, but getting a 100x return on a tiny percentage of your portfolio is still amazing. Do not bet your entire portfolio on this one, that's just way too risky. Or do whatever you feel like doing, I am no financial advisor after all. And I think that's about it. I really hope you guys enjoyed this video, and if you did, please give it a like and maybe even subscribe. Comment down below what you want me to talk about next, and I'll see you guys in the next one. Peace.